Welcome, Anthony, to Wealth Matters podcast. How are you today?
I'm great. Thanks, Alpesh.
Thank you for taking time out of your busy schedule.
Of course.
Hey, Anthony, can you tell my listeners what's your primary job or business right now?
Sure. So my day job is I'm a multifamily broker. So I buy and sell apartment buildings and represent clients doing that. And our model here in SoCal with our little boutique company called Buckingham Investments is to help people learn all about how to invest in apartment buildings, especially if they haven't done it before, teach them all the analysis, the philosophy, the strategy behind it, and help them get into their first property or maybe make that first exchange if they've already started on their own, or help people scale up their portfolios.
That's awesome. So, do you personally invest in real estate as well?
Absolutely. Actually, that's the reason I got into the business to begin with. I was first an investor. I was actually a client of my company originally and
Oh, wow.
bought a little duplex with them to get started about 10 years ago and have been growing my portfolio ever since.
So, was that duplex your first investment, or how did you start in real estate and why?
That was my third purchase,
Oh, cool.
but that was my first multifamily purchase. Uh,
Nice.
Previously to that, in 2006, I bought a vacation rental condo in Costa Rica, and
Wow.
so that was an odd one. I did get to go and visit there while
Yeah,
I owned it,
and
but
it's tax deductible.
it was tax deductible. Unfortunately, my timing wasn't so good on that one, so I rode the
Oh,
value on that all the way down, all the way back up. I sold it
mm,
11 years after I bought it for the same price I bought it for.
my God. But that's what real estate is, right? As long as you made money during that 11 years, you are good,
Yeah,
right?
it was
So,
fun. No doubt
because
about
we always don't wait for appreciation. If the goal should be cash flow, right? And then
it. Right.
appreciation would follow. So why did you start investing in real estate?
I started because I was trying to figure out what I could do as far as starting a business for myself. And my criteria for businesses that I was looking at were something that could generate passive income, something that had the ability to be scalable, and something that required a minimal number of employees. In a previous career, I had had a lot of employees to work with and
Right.
manage, and that was that's a lot of work and a lot to do there. So
Yeah.
real estate really fit all those criteria perfectly. There was no necessity for me to, invent some new business model. I'm not
Nice.
really a tech guy, so it was perfect.
So looks like you have an entrepreneurial mind though,
Oh,
because you are
definitely.
always looking for business, which is good.
Yeah.
Because the idea, even I have businesses as well. I don't work full time for anyone, but even I always tell people try to look into building a business, right? Even as a side hustle, as an extra source of income, because that you got to have that additional streams of income.
For sure.
So, we chatted about investing in California, and personally, I don't invest in California because I don't like gambling. So, what are different ways for investors to make money in a market like California?
Sure. So first of all, California, I know there's a lot of talk around there in the investing community about investing in less expensive markets elsewhere. But Southern California is really a different market. It requires a different strategy.
Right.
And you can make a lot of money here if you know how to do it. So the first thing I hear from a lot of people is, well, I can't invest in California. It's just way too expensive here.
Right.
And my kind of snippy answer to that is, well, it's expensive for a reason. It's expensive
True.
because it works, right? So
Right.
yeah, it's expensive compared to other markets. Is it impossible to get into for your average investor? Absolutely not. There's great financing that can allow you to put pretty low down payments down. You're definitely buying smaller buildings for the same purchase price. However, what's going on here is you really do have a long-term trend of strong appreciation in California. And that's
Right.
not necessarily every year. Obviously, our real estate market here is susceptible to the same market cycles that you
Yep.
see elsewhere. But over the long run, our company is fortunate to have over 50 years of local data. Over the long run, in our market right here in southern LA County, every year we have an average appreciation rate of 6.5%. So
Oh,
if you
really?
invest with
Wow.
the long-term time horizon and you're comfortable holding on to properties, you can get great appreciation. The other big reason to invest in an area like California where properties are expensive is if you understand how the numbers work with apartment buildings, they're valued on the income they produce. So
Right. Yep.
we have really strong rent growth, and in areas where gross rent multipliers are much higher and cap rates are lower, for every dollar that you're able to increase your rents on a building here, you're adding that much more value, which can be a really attractive strategy.
No, that's a great point. So, what are some things investors should keep in mind while investing in expensive markets? Right now, pretty much, I would say that Western US is pretty much bubbled up and very expensive, which includes Colorado, Seattle, of course, California. So,
Right.
what are some of the things, even because I don't invest, so someone should keep in mind?
Well, so you've got to still look at every deal like you're going to own it for a long time.
Okay.
People got into a lot of trouble in the run up to the subprime bust by
Yeah.
buying stuff that didn't pencil out on a monthly basis. You've got to either find properties that are going to at least break even or better, or ideally give you some cash flow, or
Right.
where there's a short term path to get there so that you can own the property for a long time. That's really important. And there's also this conception that investing in California, everybody just buys these luxury properties, these expensive properties. That's not really a strategy that most of our clients and myself are following. I found it to
Okay.
be a lot more effective to buy properties that are in B or C neighborhoods, B or C condition. You get a lot better numbers on those properties, but you get to experience a lot of the same economics that makes California a great place to invest. The other thing about investing in those types of properties is builders can't really build that stuff right now and make a good return. So you have no competition
Right.
from new supply.
Right. No, that's a great point as well. So, how do you analyze the deal and location when you are looking at the deal, or for yourself, or even for the investors?
Sure. So when I look at a deal, it all starts obviously with what I've got for initial investment, including down payment, renovation capital, what I think is going to be my financing structure for anything that I'm going into. And I like to buy stuff that's kind of in the path of progress, so to
Right.
speak, where there's redevelopment happening in the area. There's other investors that are coming in, improving properties, where you've got new jobs coming in, or some new big developments, or maybe a major public project that's going on, or new transit coming in. Those are all great areas to look at in investing. And when you're doing your deal analysis, of course, you've got to be aware of your market rents first and foremost, what you're going to be able to get on that property when you do get vacancies, and of course, how it's going to perform for you at close.
I see. So, as a company, when you are presenting a deal to an investor, do you provide all this data like path of progress? Is there going to be a new transit, or going to be another shopping mall across the street, etc.?
Definitely. And I would recommend whoever you work with in whatever market you're in, it really pays to work with local professionals. We've made a whole business out of knowing our area, like the back of our hands. So when we work with clients, we'll take them around, show them all the new projects that are happening, what's going on in the future of the area, all these sorts of things in the areas that we serve. We know these markets really, really well, and that allows us to give great advice to our clients and help them identify deals that may not look any different than the next one on paper. And I would recommend wherever you're going, especially if you're investing outside of the area in which you live, work with a solid team of local professionals that can help you do that.
That's the key. So I invest mostly out of state, and
Mm-hmm.
before even I started buying, I started building my team. My goal was to have a solid local team. So even if I cannot be there, they are my eyes and ears, right? They are the team on the ground. Even now, if I find a property, I can just ask them, be it the contractor, insurance agent, or even the VP at the bank from whom I got the financing. He would go and take a look at the property, or would
There
give
you
me an
go.
idea about the area, right? So
Perfect.
yes, the local knowledge is so important. So, would you be able to share with us an example of a deal, right? Just to give us an idea of what kind of deal do you see? It could be a fourplex or 10 unit, or just so that my listeners and I can understand the numbers, or the
Sure.
math behind it.
Yeah. So I recently bought a new 8-unit building just a couple
Nice.
months
So
ago.
you did.
I did
Oh,
personally, yep.
nice.
So
Okay,
I
yeah,
can tell you
that's
the
good to
details.
know. Yeah, so that kind of deal, yeah, definitely.
Yep. So this deal was attractive for a number of reasons. It was really large. It's 8 units, good unit mix. I think there's 5 two-bedroom units, 3 one-bedroom units, 10 garages, which is actually pretty rare in our
Oh,
market.
wow. So it's like a
Parking's
townhome or condo then.
sort of, yeah. It was an older building built in the '60s, but it has a little
Ah,
bit of a
okay.
feel. Yeah, the units are larger. Bought it from an owner who was retiring and wanting to get out of managing it himself. Common
Right,
story that you hear.
right.
So the rents were significantly under market, and I was able to first of all get the owner to carry the paper.
That's
So
awesome. I
that
was
was
going to ask you about financing, so that's awesome.
yeah. So we don't see a lot of that here, maybe a couple
Right,
deals a year where that goes on, but this particular seller wanted to defer their capital gain. They didn't want to manage the building anymore, but they wanted
nice.
some yield.
And get some
Common
mailbox
story.
money.
Yeah, so he gets the mailbox money from me. I get the building. I get to capture the upside in rents gradually as we increase them.
Hmm.
I bought the property for 1.7 million
Okay,
for that. That's 8 units. I think the building is about 7,500 square feet, if I can remember correctly. So the units
okay.
are almost 1,000 square feet each, which
Yeah.
is pretty large for our neighborhood. This is in Long Beach.
Oh,
And again,
nice.
kind of like what I was saying, it's not in the greatest neighborhood right now, but it's really close to good neighborhoods. Just a couple blocks away, it gets much nicer. It's walking distance to a train stop, which gets you all over LA from this area, and it's pretty close to downtown where there's tons of other development going on. Income metric wise, I bought this building at 15 times gross, which
Oh, okay.
sounds super high if you're
Wow,
used to looking
wow,
out of state.
wow. Yep.
That's probably, I think that was under a 4 cap, maybe a 3
Yeah, yeah. Makes sense.
like that. But there's a huge upside in the rents. At market, on the price that I paid for the building, it was at about 10 times gross, which is
Oh,
incredible.
okay.
So by the time I get there, it'll be operating at about a 7 cap for me, which is
Nice.
as good or better than you can do in a lot of other markets. And
Oh,
in doing
yeah.
so, when I'm done, the building will probably be worth about 2.2 million.
Nice. And seven cap in California is rare. It's almost
Very rare, and if you're
unheard
getting it, you're
of
getting it
right now.
nowhere. And this building's 18 blocks to the beach.
Oh, really? Nice. And how far is it from the Long Beach airport?
Long Beach Airport is a ways. It's probably
Right.
4 or 5 miles. It's on the other side of the city, on the western side of the city, just north of downtown.
Oh, okay.
Yep.
Awesome. So what's your plan with this particular deal? You're trying to raise the rent and sell, or you're gonna keep it for longer term?
This is a
How?
long-term hold. The seller wanted to make sure that he wasn't going to have to pay his capital gains taxes. So I have a 10% prepayment penalty for the first
Oh,
5 years
okay.
on
Got
his
it.
note. So it really makes no sense to sell. But I'm a buy and hold investor generally anyway.
Okay.
So I'm going to own this for a long time. I didn't, clear the building out. Nobody got eviction notices or anything like
Nice.
that. I'm just going to gradually increase rents and improve the building as we go along. And it should be a great one to own long term.
And my other question is, how are the taxes in property taxes in that area?
So, property taxes in California, we're kind of lucky. We have Prop 13, which protects us from property taxes
Right.
increasing every year. They can only go up by a super small percentage. And property taxes on a percentage basis are pretty small here because the properties are so expensive. So that's
Right.
really to allow people to be able to stay in their homes, not get forced out. 1.25% of the purchase price is a pretty safe assumption in our market for property
Okay.
taxes. So on a percentage basis, that's pretty low. This building, if you do the math, is probably just over $20,000 a year in property taxes.
Got it. And do you have a property management company, or do you work with a property management company?
Yes, we have a strategic partnership with a local property management company. They do a fantastic job. Their name's Borba Property Group. If anybody's looking in our local area and needs a good manager, I just don't have the time, nor would I
No,
desire to manage my own buildings.
exactly.
Yeah, they do a great job.
Yeah, if you are a broker, if you are working with investors, you should focus on what you are good at, right?
Exactly.
And the whole purpose that you acquired the property from an owner, who was self-managing, right? So
Right.
your goal is to increase the rent, goal is to get better tenants, etc. Then why would you go with a professional, right?
Yeah, I don't want to make the same mistakes that he did.
Right,
Exactly.
exactly. So
I'd
do
be
you
no
know
good at
how
it.
much, what percentage they charge for property management?
This particular company charges anywhere between 5 and 8% of the collected rents, depending
Okay.
on the size of the building. For a property of this size, you're probably going to look at about 6%. And I think that's actually a great rate. They don't really nickel and dime you with a la carte extra fees or anything like that. And they're
Yeah.
incentivized to get the rents, because if they don't collect them, they don't get paid, and keep the units full and keep the rents at market. And really, when I look at my statements and I see how much work they're doing, I get a nice clean accounting statement every month. I don't have to do anything. This is really passive income for me. It's so cheap that there's just no reason why, in my mind,
Right.
why you wouldn't pay a professional manager.
No, no, I agree. So can you share a deal with us, which was your home run? Maybe it's your deal or from your client as well, where you acquired the property, you owned it, and then you sold it at pretty good, return overall.
Sure. So one particularly comes to mind that I got a couple years ago. I bought this one in 2017. This was a 12-unit apartment building, also in Long Beach, transit corridor, close to schools. Really old building. This one was built in 1923,
Wow,
and tiny units. It was a mixture of one bedrooms and studios. The whole building's about 5,000 square feet. So with 12 units, so you can
that's
tell how
very
small the
small.
units would be
Yeah.
there. The building was totally beat up. I bought it for 1.43 million.
Okay.
I invested $200,000 into the property, increasing rents to market. These rents were at about 50% of market, so there was
Wow.
a ton of work that needed to be done here. The building was in such bad condition you could see daylight through the roof from
Nice.
inside some of the units.
Oh,
So it was that kind of thing.
that's a lot of work.
Yeah, a lot of work, but it actually had pretty good bones. It had modern plumbing that had been replaced in
Right.
'99, and decent foundation was fine. So it was really kind of roof and tons of cosmetic work. I refinanced that property 6 months later, which I basically consider my exit, and
Mm-hmm.
my appraisal on the refinance came in at $2.17 million.
Nice.
So, and after the refinance, the building cash flow is about $5,000 a month. So, in 6 months, I made $540,000 in value add, and I make $5,000 a month in cash flow now. So, to people that say you can't cash flow in California, I beg to differ.
That's great. So when you refinanced it, you got most of your money back or all of your money back?
That one, I got a little bit of cash out on the refi, but that purchase was an interesting structure because I only put 100 grand down when I purchased. So I got a
Okay.
95% loan to value bridge loan by cross
Oh, I see.
collateralizing another property that I owned. And then
Okay.
I think I ended up getting about 70,000 cash out. I put 200,000 in for the renovations.
I was going
So,
to ask.
my
Yeah.
total cash into the deal, I guess, was about 230,000 all said and done, but making 540 there in the value add plus the cash flow, I mean the returns on
Right.
that
Yeah.
are
Means
really
if you are making cash flow of 5 grand a month, that's 60 grand a year
yeah,
on a 230,000 investment. That's amazing.
not too bad.
I haven't heard of that in California. So
That's
yeah.
definitely the exception to the rule. I wouldn't say I could duplicate that again now.
Right,
It was a
right.
great
And that's why I asked for the best deal, right? Uh,
deal.
so what's your worst deal?
Yeah. Sure. So that first duplex I bought ended up being quite a bit of a mess actually.
Oh, really?
It looked really attractive because it was a duplex and it had a non-conforming bootleg third unit,
Hmm.
that was being rented out technically illegally in the
Right.
back, which made the numbers look great. So it closed. It was a great deal. I felt good about it. Unfortunately, the tenant in that back unit found out about it, and they had some sort of grievance with us, and they notified the city that about the unpermitted unit, and the city came, checked it out, got a code violation,
Oh,
and they basically threw the book at me on this property. They reviewed the records, and despite it being a legal duplex with a non-conforming third unit, they forced me to convert it all the way back to a single family residence
oh my
because they
God.
said that the zoning didn't support a duplex, even though that was the legal configuration going back to the 1950s.
That's
So
crazy.
not great. The tenant also filed suit alleging that they were, living in a non-permitted unit and that there were damages owed. Luckily, they didn't win, but nobody likes to go through that
Right,
experience either.
right.
So that deal wasn't so great. I was able to hold on to it after it was converted to a single family, and I ended up selling it for a gain, believe it or not, because the timing was
Nice.
really good. This building was
Yeah,
bought kind of right at the bottom of the subprime crisis, but not a great deal.
that's awesome. No, thank you for sharing that. So let's take a quick break, Anthony, and we'll be back after the break.
Okay.
Welcome back to Wealth Matters Podcast. I'm chatting with Anthony Walker, who's based out of Southern California, and I'm talking about how to invest in an expensive market like California. So I'm thank you for sharing the best and the worst deal you have done so far, Anthony. My next question is, of course, I saw that yes, you made the mistake, and hopefully, and I could see that you learned from it. So any mistakes you have made so far, glaring mistakes, and if you can share with us, then myself and my listeners would at least learn from those mistakes.
Yeah, so I can't stress enough the importance of good due diligence when you're buying these buildings. That you can really avoid the vast majority of mistakes if you do solid due diligence. So in the example of the duplex, I did know about the non-conforming unit. If I had looked more closely into the zoning, maybe I would have identified that there was something there. But I've definitely had other situations where maybe I didn't review city records in great detail, and there was unpermitted square footage that I hadn't seen, or bedroom counts not matching, stuff like that. I'd be very careful there. A lot you can do on inspections. Obviously, a lot of the buildings in our market are really old, so
Right.
that's really important. And every inspector is not as good as the next one. I would
Uh-huh.
make sure whoever you use does a really thorough job, and you know what you're getting into.
Yeah.
It's also really easy to look at your budget and your pro forma with rose-colored glasses. These things often end up costing more than you're expecting. The
Right.
transaction fees really start to add up. The work adds up. The vacancies can go longer than expected. Keep seasonal considerations into mind in the rental market. I've had units sit vacant over the holidays, and that can really hurt.
Right.
I really wasn't expecting before that. And just go in with some extra budget to make sure that you're going to be okay, and be careful with the financing.
Nice. Yeah, due diligence is the key, right? It's very important. And of course, if you are financing, bridge financing or hard money lending, you got to make sure you have captured all the carrying costs and other fees.
Absolutely.
No, that's awesome. So any advice you can give your younger self knowing what you know now?
Knowing what I know now,
And,
I
and
would
you,
have
you are
gotten.
already young, so I'm not saying.
Okay. I'm older than I look, but yeah. Knowing what I know now, I would have been a lot more aggressive when I started.
Hmm,
Of course, hindsight is 2020, and you never really
right.
know what's going to happen in the future. But had I really doubled down when I started, I would be in such a more incredible place now with regard to net worth and cash flow, just because of the way time value of money works. If you
Right.
find your system, and you've got a good team, and you like your market, and things are going well, don't be afraid to take a risk. I was pretty cautious with my real estate journey for many years, and I think I left some money on the table doing that. Other than that, I think I had a great experience. I had good partners that kind of introduced me to the industry. I had a great team around me. I was able to learn while doing, and it's been awesome, honestly.
That's great. So, any books or tools do you recommend for someone, starting out in real estate or someone trying to explore markets like California?
Yeah. So podcasts are great, obviously.
Right. Yeah.
Go out. There's so much information that you can get
Yes.
right
You
now.
can't go wrong with the podcast.
Yeah. As far as books go, our founder's written a handful of books, which are great books to start with. One that particularly comes to mind, which really helped me out, is called The Unofficial Guide to Real Estate Investing by Martin Stone.
Okay.
He's one of the founders of our company. And that book, unlike a lot of other real estate books, which are kind of a pep talk, this book is really detailed. It goes in step by step what you need to know about financing, management, appraisal, valuation, picking your market, all that kind of stuff. So if you want a really good book that kind of covers the breadth of the whole experience, that's a great place to start. It's a long one. It's almost 400 pages. But we kind of look at that as our Bible, and that's a great starting place for anybody looking to get into multifamily or just investing in general.
Okay. I need to get a copy of that book then.
Check it out.
Definitely. So, how can my listeners reach out to you?
Absolutely. So they can check us out at buckinghaminvestments.com, all spelled out and plural, like the palace in
Mm-hmm.
England. Or you can email me directly. My email is anthony.walker@buckinghaminvestments.com. I'm always happy to get emails from people that are interested in talking to us about what's going on here locally.
Thank you so much, Anthony, for sharing the words of wisdom with us.
Thank you, Alpesh. It's been my pleasure.